Hello, everyone, and welcome to another edition of iGaming Next Weekly News Live. Now, you may have noticed that basically after all the horrible abuse and the online criticism we released last week for basically lying about our live reaction to DraftKings, we decided to use the most boring thumbnail imaginable this week with just a Q4 results recap. But I promise it's going to be a lot more exciting than that. How could it not be exciting when I'm joined by two legends of the iGaming industry, Connor and Nico? How are you both doing?
Oh, very well, Jack. That was a very generous introduction. But you know what they say, haters gonna hate. So if people don't like it, that's up to them. But yeah, we've got a good show coming up today for sure. How are you, man?
Yeah,
No,
I'm all good.
I'm awesome
Nico
as
is one
well.
of those haters, more to the point.
So first of all, last week you literally draw some kind of attention, and I'm pretty sure based on ICE and LAC just around the corner, especially the affiliate approach with promising the world and then not delivering each and everything you promised. Probably that was the baseline of okay coming up with the headline and not yet delivering, but in the end it was coming for the headline and staying for the content. So once again, shout out to each and everybody being eager to just listen to what the three of us are about to say.
Yeah, exactly, Nico. I thought you were going to twist a knife in there, but you rescued it just at the end. And yeah, of course, thanks everybody as always for tuning in. Please do join the discussion with some comments on LinkedIn. Hi to Zoe, hi to Tarek, and hi to Elizabeth who have joined us so far. We've got a bumper schedule as always, but before we get stuck into our topics today, I think Nico is ready to take it away with 10 and 5.
Yeah, of course. Like each and every week, I'm able to actually join you. It's the 10 and 5, and I always hit the nail, especially when it comes to timing. So, I will just start because then I'm gaining some extra seconds at least.
Good idea.
As of now, and especially within this week, we have three topics from the UK, starting with the Premier League is about to agree on a betting shirt sponsorship phase out. So the Premier League club bosses are likely to settle and betting sponsorships no longer appearing on the front of team shirts. This decision has been reported yesterday evening by the BBC News. And just to catch you up where we're standing right now, at the time and back in the days, almost more than 1 year ago, the Premier League clubs were scheduled to hold a vote on whether to agree on a mandatory ban of shirt sponsorships or not. And this vote was suspended after the party Boris Johnson resignation and the Conservative Party was in the limbo of launching its leadership contest. So it seems like we're back on track. Then the Italian gambling sector has been told to prepare for industry reorganization. So the Italian government has told the gambling sector to get ready for industry reorganization in the coming months. The National Conservative Coalition government under Prime Minister Giorgia Meloni has assigned Treasury Deputy Italo Volpe to oversee the initiative and bring stability to the market. And Volpe told a conference in Rome, a regulatory intervention in the market must be carried out. It is reasonable to assume that in the tax reform bill, there must also be a chapter dedicated to the gambling sector. So, shout out to Italian regulation, which will change a little bit. Heading over to another regulation, which is in the limbo. Match fixing scandals may clear paths to Brazilian betting regulation. A breakthrough in Brazil's sports betting impasse may be imminent, with one legal expert suggesting region match fixing incidents may have accelerated process. So this is the latest twist in more than 4 year saga since the country's legislature voted to legalize both land-based and online sports betting back in 2018. So who would have thought that maybe match fixing may do the trick to sports betting in Brazil might become reality. Heading over to the US, Minnesota sports betting effort starts with key supporters aligned. So there's a sports betting bill which has passed over to Senate, and this proposal includes a letter from the state's professional sports team confirming their support for legislation that gives Minnesota tribes control of sports betting, and the bill will begin its journey into the Stephenson's Chaired House of Commerce Committee ASAP. So Minnesota sports betting on track. North Carolina on online sports betting legislation is set up to be introduced in the coming days as well. So also this one will work out. And Georgia sports betting bill is sent to full Senate vote after passing committee by 8-1 vote as well. So the Senate Bill 57 has been passed the vote by 8-1, and this will now be sending to legislation to a full vote. So 3 upcoming more states in the US as of now. And then Esports Entertainment Group, short EEG, is about to offload their Betard business for 9.5 million euros. So Betard is the operator of the online casino and sportsbook brand licensed both in Malta and Sweden. And the total purchase consideration was determined by around 9.5 million, which includes 1.65 million payable in cash upon closing. Then we have some more details on the Penn Entertainment Barstool acquisition, which results in overall total price exceeding $550 million US. And now heading over once again to the promised land, the UK, with the Winning Post telling the Gambling Commission that it needs to explain another fine mess. Ahead, the government publishing definitive industry reforms, Regulus Partners points to mounting criticism of the UK Gambling Commission that has failed to explain its tougher regulatory approach. Just remember that the UK Gambling Commission, as of now, has fined significantly the operators being licensed in the UK, and they obviously are missing the point about the why they increase these fines. And last but not least, and shout out, Stuart Andrew will become the 6th gambling minister since the overall review began. So, as said, shout out to Mr. Stuart Andrew. And I'm pretty sure it just takes 2 or 3 or 4 weeks or infinite until we will see the long-awaited, what was it called? White paper. Exactly, the white paper. So, Stuart Andrew, you will be just as good, at least as everybody else. And we're expecting the white paper to being delivered in mail into all our mailboxes no later than Friday the 13th, end of business. Thank you.
Very well done, Nico. I think that was 5 in about 8. But yes, I'm sure the white paper review will be with us within the next 6 to 8 weeks, months, or never. I must say, I was struggling to focus on what you were saying, actually. I was so distracted by the fact that you seem to have a perfect golden halo above your head. It started to remind me of a particular religious figure. I'm starting to think we should change the name of this segment to Nico's 10 Commandments, maybe. But anyway, Jake and I, very proud to be your disciples.
Yeah, absolutely. I think that was a great summary, Nico. And Connor, they'll probably be knocking on your door to be the next gambling minister before long. I think they've gone through everyone else already. But yeah, let's also let's say hello to Stephen and Robert and Ran and Urban and Bogdan, who have all joined us since the intro, and to Katie, of course, who's an avid watcher of ours and a friend of iGaming Next. And also Carolina says hello, who had some really interesting news with Beyond Play last week, amid some interesting investment from Better Capital and a couple of other partners. But moving on, let's dive into our first main topic for today, which is Kambi and their Q4 results. And I think Elizabeth, our awesome producer in the background, might have a little revenue graph to show up as I'm just going through a bit of a summary. But basically, Kambi reported all-time high full-year revenue after a strong Q4 driven by the World Cup and a busy US sporting calendar. But their revenue was actually boosted by a 12.6 million euro early termination fee from their US client Penn Entertainment. As we've written about, so basically this means Penn will come off the Kambi platform this year in favor of its own proprietary technology, which is being built on a tech stack from theScore, which is a Canadian media company that it acquired a year or two ago now. And Kambi, as we know, is kind of, still feeling the impact from losing DraftKings as a tier one client. And with Penn to go later in the year, that kind of leaves Rush Street Interactive as their major US client remaining. There was loads to take away from these results. I think that's enough of the graph now. Thank you, Elizabeth. But yeah, there's loads to take away from these results. I think there was a really funny continuation from our chat last week with Pierre, where once again the kind of lasting legacy from Mattress Mac was brought up, who's piling pain on not only the operators but their suppliers as well, because Kindred and Penn, who are obviously two big Kambi clients, basically had to pay out 4.4 million and 10 million. And Kambi CEO Christian Nyland said on the earnings call in a kind of very miserable way that it did indeed impact Kambi in the quarter as well.
Yeah, but I don't want to talk about it.
Exactly. Didn't really talk much further, but the phantom of Mattress Mac lives on, I think, to haunt the whole ecosystem, it seems. Fellas, we can talk about the World Cup, but did anything jump out from these results for either of you?
Yeah, I mean, on a Q4 basis, they did very well. I mean, revenue is up 66% year on year, including that early termination fee from Penn. And obviously that was driven by the World Cup. So we had a little stat in our report, which was that 9 out of the 10 top sporting events in Q4 by turnover were World Cup fixtures, which I suppose is to be expected.
Yeah.
But I think the growth on an annual basis, so for the full year 2022, I mean, if Q4 hadn't been as good for them, I dread to think what the full year would have looked like, because they did achieve record revenue, but it was only up 2% on last year. So, they've got some pretty ambitious targets for the next 5 years, 4 or 5 years that they've released. And I think it's not exactly crystal clear how they're going to achieve that if they've got an annualized growth rate of 2%, because they're looking to triple their revenue in the next 5 years. So not sure exactly how that's going to pan out for Kambi.
Yeah, exactly. And as you mentioned, the World Cup and those kind of 9 of 10 biggest turnover events. I don't know what the 10th one was, by the way. It'd be interesting to find out. But so the World Cup final itself actually set a new turnover record, and that's operator turnover for a single match for Kambi. So that's pretty interesting. We went to the Kambi stand at ICE, and it's an awesome stand, always a great stand. They do really good coffee on there, by the way, and you need that to keep going at ICE, as we all know. But the problem for Kambi, I think, and this was evident by their stand this year, was that obviously we've got fewer operators that are kind of interested in taking on, the full turnkey sportsbook solution, right? We've talked about those that are migrating away from Kambi. And I think the future of Kambi will kind of be decided by the success of this modularization strategy that they're implementing, where it basically splits off different parts of its technology for the individual needs of an operator. we've talked loads about AI in the recent weeks and ChatGPT and stuff. And one massive part of the strategy for Kambi is their automated trading solution, where it basically calculates prices, in and of itself, if you like. And they said this past the World Cup, and that it was like the World Cup was a major stress test, if you like, and it kind of did really well. So they've decided to wheel it out into other leagues. But the other really important element of this solution is Kambi's Bet Builder. And I don't think they've signed like too many clients for this yet, but they were at pains during the earnings call to kind of show that its pricing on its Bet Builder was actually superior to some of the US market leaders like DraftKings and FanDuel. And I think we've got another graphic that they used in their presentation to support that. So they used a kind of Super Bowl bet builder as an example here, just kind of like an accumulator bet as you'd see in the UK, where Kambi odds were 850 to 1, whereas DraftKings was 7 to 1 and FanDuel was 690 to 1. Which is obviously interesting, and it's an edge for Kambi clients. But one of the analysts made a really good point, and he kind of said, as you're a B2B company that doesn't really do any above the line marketing, how are you going to be able to communicate to the end user, which is obviously a US sports bettors, that kind of your bet builder pricing is superior to others in the market? And they didn't really have an answer for that. And I guess that is a genuine dilemma, Nico, would you say?
Yes. So, and that's why other bigger, at least software providers, have at least one brand which they operate on their own, like BetConstruct with VBet, because then you always have proof of concept, and then you can outline like, okay, it's working in the market. It's not a theoretical construct, because numbers don't lie. See how we performed within the Super Bowl. This was our odds, and these had been the odds of our competitors. So that's why, as said, some of the other bigger sports software providers have their own brand as well.
Yeah, that's a really good point. We've seen Betson kind of just try to do a similar thing to that as well in the US with their sort of B2B sportsbook showcase in Colorado. And you're right, it means that if those kind of big operator clients do drop away, you've still got that proof of concept there. But yeah, I mean, he kind of said, Christian Nyland, the CEO, said, we'll really push operators to be aware of how good a pricing they have, which again means kind of it comes down to the operators themselves, and they're spending enough money on marketing as it is in other channels to kind of, prioritize Kambi's Bet Builder product. So it's a difficult conundrum for them, and it's an interesting period for Kambi. It's definitely a business in transition. So yeah, I don't know if we've got anything to conclude on that. Any additional comments before we move on to the next company?
Yeah, what was kind of interesting was, last year it was bad news after bad news for Kambi. The stock prices was under high pressure, especially with the DraftKings moving on. And once again, shout out to our man Daniel Gretzer. They signed a long-term deal with MaximBet. Turns out that MaximBet needed to literally leave the market. So, of course, things could have turned in another way if things would have changed within or alongside the path. But I'm pretty sure, especially as stated, that Brazil might be becoming a reality finally. And if I'm not mistaken, Kambi, they signed up with one of the bigger clients in Brazil as well. Yes. As they're focused on legalized and wide markets as well, I'm pretty sure they're well set up. We will just see how the actual numbers for the Q2, Q3, and Q4 of 2023 will actually turn out to be.
Definitely, yeah, it's looking positive for Kambi. I think they obviously had kind of day one launches towards the end of this year in Massachusetts and Ohio. I think they powered 12 operators, they said, in Ohio on day one. I couldn't tell you exactly who, but yeah, they've extended that partnership with Rush Street as well. So yeah, the US and LATAM, I think you're right, Nico, are probably going to be key markets for them going forwards. Okay, Now, moving on to Better Collective. So from one World Cup boost to another, I suppose, and the first of 3 affiliates to report their Q4 2022 results yesterday, which certainly kept me and Connor busy. I think, again, we've probably got a little revenue graphic for you. But the interesting thing for me here was the number of new depositing customers referred to operators by Better Collective during the quarter. And that was an all-time high of 580,000. Now, they said of those new depositing customers, 78% were sent to operators on rev share contracts. And Connor, I know you've written a fair bit about kind of the affiliate mix between cost per acquisition and revenue share models at the moment. So I think we're done with the graphic, and then Connor, you can take it away.
Yeah, I think it's really positive news for Better Collective, and it's something that they've been talking about for a while, is this transition away from CPA agreements towards the rev share stuff. And it makes, obviously, a great deal of business sense. It helps them to create a much more sustainable business by having that recurring revenue sort of coming in, and it's makes sense as a growth model, doesn't it? Because the more NDC, new depositing customers, NDCs that you get, they're always just adding on to this revenue, which then becomes recurring revenue as long as the operators maintain that relationship with the end user. So you might get someone betting with an operator for 10 years and you're going to get your slice of the pie throughout that relationship. So yeah, there were 580,000 referred in Q4. 300,000 of those were a direct result of the World Cup, according to Better Collective. So it was obviously a massive boon for them, huge acquisition event. And as you mentioned, 78% of those were sent on revenue share contracts. So my understanding of the situation is, especially in the US, operators have been a little bit reluctant to do revenue share deals, which I suppose is understandable. They want to do customer acquisition in the most efficient way possible, I suppose, and reduce those costs as much as possible. And I think the CPA agreements, even though probably quite expensive compared to what we've seen in the last few years, you know, obviously going into the US market, the costs are relatively high. I think still they would have provided much cheaper customer acquisition to operators than these revenue share deals. The CEO, Jesper Søgaard, has kind of explained the fact that a higher proportion of customers are now sent on rev share deals as being a result of the strength of Better Collective brands in the US, with a particular emphasis on Action Network. He described it as, what did he actually say? He said the brands that we own in the US market are becoming must-have brands for their operator partners to be featured on. So Action Network is obviously a huge unrespected destination for sports bettors and sports fans. It was acquired by Better Collective in 2021, I believe, for something like approaching $250 million. It was something like $240 million. Probably the biggest M&A deal ever seen in the online gambling affiliate sector, possibly still remains the biggest deal seen in the sector. And actually, it's curious, if you Google now, because that was principally a news and analysis portal, if you now Google Action Network, you see the first thing it says about itself on the description is sports betting odds, news, insights, and analysis. So sports betting is absolutely the first thing that they're trying to do. And it's obviously just a massive asset for Better Collective, and it's giving them, it seems, it's giving them quite a lot of leverage with their operator partners who are going to miss out if they're not featured on that website. So, you know, amazing quarter for Better Collective, great year for them. You know, they're kind of running away with a lot of this affiliate revenue. Their results have been a lot, their earnings have been a lot bigger than some of the other affiliate groups, I think we're going to move on to in a few minutes. But yeah, I mean, amazing progress, really, starting to dominate the market, if you ask me.
Yeah, nice summary, Connor. And we've seen obviously the biggest affiliates in our industry talk about the US for some time now, and they've kind of not had those sort of profitability struggles as operators because the business model is entirely different. But it was interesting to me. So Better Collective generated more than $100 million in revenue from the US in 2022. Now, you would probably say that Catena Media, who we're going to come on to, are their closest competitor. Although I must say Gambling.com Group has not reported its Q4 results yet. So, Nico, a question for you. How much US revenue do you think Catena Media has generated in that time?
So first of all, getting back to the Better Collective, whoa, 1 second, one thought. As already pointed out by Connor, they heavily invested into the US as well. They also relocated key people with Carl Pook, the CCO of M&A activities at Better Collective, also over to the US, and that just emphasizes how serious they actually take the US. With markets opening after market opening after market. Ontario opened up just prior the World Cup as well, and it would have been quite interesting to have one graphics with how heavily did they actually invest into the US besides the Action Network with $240 million US dollars acquisition, and I'm pretty sure. Although Carl keeps very, very quiet even after they made a deal on how much they actually paid for it. But I will clarify this once I'm in New York as well in a face-to-face contest with him. Maybe we'll just have a little bit of a dance. But I'm pretty sure after the iGaming Next New York, I will just know a little bit more about the insights on Better Collective and the US. And getting back to your point with the Catena Media, I did not read through their statements, but first of all, Better Collective is a shareholder as of now at Catena Media. If I'm not mistaken, they hold at least 8%, 5 to 8%, something like this.
But 6%, I think it was.
Yeah, so Catena Media has been in the limbo a little bit. And I'm pretty sure at least 12 to 15% of their revenue actually comes from the US.
Yeah, so well done for sort of half playing along there, Nico. So Better Collective, 100 million in US revenue for 2022. Catena Media, 84.5. So still a super hefty chunk. And like you say, really interesting. They've built up that shareholding because, as we know, Catena Media has instructed Carnegie to look at potentially a sale of the overall business, right? And if you'd think potential suitors, Better Collective has to be up there with its balance sheet and its scale. I don't think too many others would be able to put in a decent bid. But with those kind of cost savings and synergies as well, if those two were to combine, you would expect that full year US revenue to go well above 200 billion. And to keep on climbing. Obviously, we're just speculating, but that's what we like to do on Weekly News.
Not investment advice, clearly.
Especially if you just take a look at the overall landscape. You have as of now Catena Media, probably they recovered. Better Collective with deep pockets, and Gambling.com as well with deep pockets after their IPO at the Nasdaq. So we're speaking about 3 or 2.5 big affiliates with deep pockets, and I'm pretty sure one of them will just buy even a bigger stake into Catena Media, and this investment doesn't come cheap.
Yeah, good point, Nico. Well made. And as I mentioned, obviously staying with Catena, them and RateTech reported their results yesterday, but instead of talking about the US, both of these companies made a point of talking about Japan, which is interesting. I think we might have 2 quotes from their respective earnings calls to show you. So read through those while I'm just summarizing. But Japan is an interesting market because affiliates have been live there for some time, and it's not regulated, but you would say probably that online casino is tolerated, especially compared to somewhere like China, where it's illegal and can result in jail time. But these comments on kind of, having ambitions to expand into unregulated territories kind of go into what we've been saying for a few weeks now about Operate as well. I know we talked about Betsson recently, and how kind of being, prepared to explore unregulated territories comes with increased risk, but also very often increased rewards. Thank you for those graphics, Elizabeth. Any comments on Japan, fellas? A tricky subject, probably, but
it's not a market I know anything about. But I think the point with you're right that obviously without a regulatory regime in place, a lot of these pre-regulated markets do offer probably better margins for people like affiliates to go in there and not have to pay any licensing fees and local taxes, perhaps that kind of thing. But it's also obviously a bit of a future play, and I think RakeTech's CEO said something about that, which is it's about building that market share in advance of regulation being introduced, and then once the markets regulate, we come out with pole position. That's what he said about the kind of strategy there, which I think is something we're seeing in a lot of different markets, something you see in LATAM and Africa, trying to build that presence and build that awareness before the regulation actually comes into force.
Yeah, good point. And I think Japan, again, which is a market I don't know particularly a lot about, is similar to a lot of LATAM countries where localization is absolutely essential, because culturally, obviously, what works in Europe is not going to work there. Is that true in your experience or your knowledge, Nico, would you say?
Yes. So, and continuing the talk I had with Ian Turnbull during ICE, because DAZN, they actually launched their NFT marketplace in Japan. I don't know if you remember. I can't literally, kind of get into the details of the discussion I had with Ian, but let me rephrase it like this. First of all, they see Japan as a testing point, a testing geolocation where they can literally, kind of roll out things. And as a matter of fact, they did not roll out their NFT marketplace anywhere else. So you can take a guess why, but I'm pretty sure if the numbers would have been off the charts, I'm pretty sure they would have taken that approach and launched it in any other geolocations. But as pointed out, so Japan is quite unique. And for sure, and this is how DAZN actually made it. They made their rollout with a local team. So in the end, you need to be locally there in Japan to understand the market, to understand the needs, and for sure to understand the language and the written languages as well. And I'm pretty sure this actually does the tricks. Besides people from Japan, the Japanese being quite eager with their mobile activities as well.
Yeah, exactly. We can't overstate that language point enough. We've seen a number of companies fall down in different markets with a inferior offering in that respect before. But Japan, it's not just affiliates that are exploring it, operators as well. I know GameSys, which is now part of Bally's, had huge revenues coming from Japan before that merger happened, and likely still do, certainly in iCasino. So yeah, an interesting market and one we need to probably explore a bit more, I would say, Connor. Might be an interesting feature for one of us further down the line. But let's move on to our next topic now. And I think, as we've just done affiliates, the Better Collective CFO kind of summarized it perfectly for us. I think we've got another graphic for you where he's talking about public markets and the investment landscape at the moment. If Elizabeth can find it. Here we go. Right now, there is a mismatch between public valuation and private price expectations. Until that gets into sync, I think in general, there will be more muted activity. It's not interest rates as such, it's the public valuations. The multiples that we're trading at are basically below the expectations of the targets that we're looking at. Thank you very much for that, Elizabeth. Interesting commentary there. And we've had a couple of high profile and very successful iGaming industry investors write some pieces for our news portal this week. The first was actually first published on Medium by YOLO Group founder Tim Heath. His piece is excellent. It's should the iGaming industry put champagne on ice or back in the fridge? A great title. And he says, over the last year, we have seen the SPAC market largely fizzle out, reducing the likelihood of large-scale M&A unless the acquiring business has significant cash on the balance sheet, which is true, and I think it's something we can all agree with. But he says that for venture capital companies, the outlook is more optimistic, especially in iGaming. And, you know, he would know. So how do we, what do we think about this, guys? Is it all doom and gloom, or as Tim suggests, is gambling a real canary in the coal mine?
Well, one of the things that I really liked that Tim wrote was that the downturn, that is to say the kind of tightening of belts across the industry and falling valuations and so on, the downturn is healthy in the sense that the fundamentals were being ignored for too long. I'm optimistic that the strong will survive and thrive, and we will be a more successful industry for it. And I think, well, I had a conversation with Benji Cherniak, who's the principal at Avenue H Capital, another investor and advisor to the sports betting and iGaming industries. And he said something quite similar, which is that, you know, there's plenty of dry powder out there. VCs raised record capital in 2021 and then kind of sat on it throughout 2022. And now they've still got that capital ready to deploy, but they are being a great deal more selective. And so I think, yeah, for those businesses that don't have a really very compelling proposition, or that don't have a proven use case and so on, things are starting to look really tough. And I also think that in terms of the B2C space at the moment, that's a pretty dangerous game to be playing, especially in markets like the US or the UK, where, you know, a small handful of brands have just got massive market share. You would be reluctant to pour any cash into a new B2C brand unless they were really offering something different. Of course, we have seen that. We've seen people come onto the scene with something which is differentiated in some way. You've got Better in the micro betting kind of focus in the US, and a few different products come into light. But generally, and I think it will, generally for me, I think the bigger opportunities are on the B2B side. So one of the things I discussed with Benji was AI and new technologies and the kinds of B2B back-end products that are going to help operators really personalize the experience for their end users. You know, that kind of thing is going to get more and more important as the kind of battle of the products continues in the US. And I think something that's interesting, Tom Waterhouse, who's a good friend of ours and chief investment officer at Waterhouse VC, he is exclusively focused on the B2B side of the industry, despite being a lifelong bookmaker and coming from a long line of B2C bookmakers. He's now completely focused on B2B. And for me, that is that kind of tells me something about where a lot of the money's going to come from. It probably is going to be on those technology suppliers and people bringing the innovations to the market in the back end of the market and not in the consumer facing end. That's my own view. Happy to be proven wrong, of course, as you.
Yeah, no, I think that's a fair summary, Connor. And there was more evidence of that in a Q&A that went up this week with TechCorp Capital founder Matt Davey, who I'm sure you'll all remember was the old CEO of Nix Gaming Group and then SG Digital. But he's obviously made a range of investments in iGaming over the last few years, some more successful than others. I think he would say one of his most successful was BetMakers, which, as we know, are a technology supplier. They're powering the other Better in Australia, not to confuse everybody as we tend to do. But he's also invested in like the Bored Ape Yacht Club, for example, which we know kind of fell through the trapdoor and then kept on falling. Good. So yeah. So sorry.
They're worthless, clearly. I'm whatever the opposite of an NFT evangelist is. That's what I am. An NFT hater. Yes. suppose.
So his rationale for investing in that was that he thinks basically the industry was really slow to invest in other disruptive technologies previously, like social gaming, for example, which now we know is an absolutely massive industry. Whether NFTs will ever be a part of that looks unlikely at the moment, but maybe that was an opportunity he didn't want to miss out on, and so decided to take that risk. But our friend Robert Lenshofer makes a good comment in the chat. He says it depends on the stage of the company. Early stage equals good outlook, late stage equals tough, and that is generally true in the tech industry currently. I think most of us would probably agree with that. And Nico, I think you need to say hello to one of your friends in the chat as well, who wasn't aware that he could participate via the comments section, which is the beauty of Weekly News Live.
Yeah, first of all, shout out to Hugues as well. Thanks for being here. And I would just like to add one more thing to the comment of Robert as well. So early stage, good outlook, mid stage and late stage, it's tough. And this is not linked to a specific industry or a specific vertical. If you just remember, like as soon as you just need to get fresh cash into the group or the company to keep things up and running. One of the German-based unicorn Gorillas, they were seeking for new money. They couldn't get new money, and they had been sold to Getir, one of their competitors. So it's not just linked to the iGaming industry, it's linked to each and every industry as well. So as soon as you're looking for further money, fresh cash, it will get difficult, especially with the evaluations. Which had been crazy during the times where literally you couldn't invest anywhere else instead of investing into early stage startups or even Series B and C companies, where the evaluation of the companies had been up to 100 times their EBITDAs, which is just crazy. And even to quote Mr. Joseph Alois Schumpeter, who is the owner of the Creative Destruction. So whenever a crisis like this actually hits the market, it clears out the markets, and the strong and fit will always survive or find new opportunities as well.
Yeah, super interesting, Nico. And Tim, I think, agrees. He says, we especially think firms that are able to bundle their gaming and entertainment offer into a broader Web3 service, such as banking and education, have the greatest chance of success in this market. So if you can spot any companies like that, get your wallets out, basically. But there's also a little bit of light on the horizon for SPACs and IPOs making a bit of a comeback potentially, despite obviously the negative looking macro environment at the moment. We've heard today, in fact, that Superbet, a huge Romanian operator that has aspirations to sort of enter into other European markets, is likely to do an IPO by the end of the year. And Lottomatica as well, the massive Italian operator, are also scheduled to do an IPO. SPACs, I think it looks a little more bleak. I don't know if we'll see any more of those for a little while, but certainly it's looking slightly more optimistic. Now, one thing to mention before we go is that there'll be a lot of this kind of investment and iGaming overlap chat at our New York event in March, which I'm thrilled to say is sold out with 2 weeks to go, gentlemen. What an achievement that is.
Yeah, absolutely. It just goes to show how important these kind of meetings are, especially in markets like the US, where everyone's still getting to know each other, people still looking for new opportunities and ways into the market. I think it was just an absolutely amazing show last year. Sold out last year as well. We had some fantastic people there, and yeah, it looks like it's going to be just as productive and just as successful this year, with lots of interesting people joining us. So something to look forward to in the next couple of weeks. For those who didn't get their tickets, I must say bad luck, and you have to try again next time, unfortunately, but it's very, very exclusive place to be.
Yep, 600 tickets sold or guests. If you didn't make it, please join us next year. And I personally am thrilled that we've managed to get Adam Greenblatt, who is the CEO of BetMGM, pretty much the third biggest operator in the US market, to come down and join us. He'll be speaking, so that's one to look out for. But also, we're giving attendees the chance to meet 2 celebrities this year, because Connor and Nico, you'll both be going, right?
That's right. We'll be there. We'll be there. We'll be in our special VIP area, VVIP. It's just a red rope around me and Nico, a couple of chairs, and we'll just be there, fielding any questions. Or if you want to come and get a selfie, of course, just ask, and we'll be more than happy to do that for you.
Exactly.
Which is a scientific fact.
Yeah. If you want to say hello to Nico and Connor, please do reach out to them before next week. I think we've got one more weekly news next Thursday until New York. So we can do a bit of a preview again next week. In the meantime, gentlemen, thank you ever so much for joining me. It's been a great show today. I want to say thank you to everybody who joined us in the chat and commented, and also to Playson, without whom this wouldn't be possible. So thanks for joining me, fellas. Time to say goodbye.
Thank you, guys. Enjoy the rest
Thank
of your
you.
day.
Bye-bye.
And soon.